Well, good morning, everyone. Welcome to the Bipartisan Policy Center for what I'm sure is going to be a dynamic conversation about the future of the soul of the country. I want to thank you all for your bravery fighting the weather to get here. There was a snowflake spotted in Montgomery County, so my kids are home for the day. But you all clearly care very deeply about this topic, as you should. As you know, we have a couple of great speakers to lead us off. We're going to have a panel discussion. We are committed to actually providing time for questions throughout the morning here. So let me start off with the great pleasure of welcoming Senator Shaheen to join us today. The senator, as I think many of you know, was elected in 2008. She is the ranking member of the Senate Small Business Committee and played a really important role in the 2010 Small Business Jobs Act. During the senator's tenure, she has led efforts to increase access to capital and credit for small businesses. She's worked hard to reduce unnecessary burdens in overregulation and complex regulation that doesn't really get to the bottom line and the goals. And maybe most important, Senator Shaheen is a former owner and manager of a small retail business in New Hampshire. So she experiences these issues very much firsthand. And so it's a real pleasure, Senator, to have you join us this morning.
Well, thank you very much, Jason, for that nice introduction, and good morning, everyone. It's so nice to be here with all of you, and it's especially nice to be here with two women who I have such tremendous respect for and who I've had the pleasure of working with. My former colleague, Olympia Snowe, who, when I got to the Small Business Committee back in 2009, was the ranking member, though she had been chair, and it was the first committee in the Senate that was chaired and had the top two senators were women. So that was really exciting for me to be part of that effort and to have her leadership on the committee. And Olympia, we could really use some of that leadership right now in the Senate. The effort to be bipartisan is challenging some days. I also am so delighted to see Karen Mills again, who was the head of the Small Business Administration at that time and took over at a really challenging time when we were in the middle of the financial meltdown and starting on the recovery, and your leadership really made a huge difference. And it's really exciting for me to see the two of you continuing your leadership now here at the Bipartisan Policy Center. So thank you both very much. I don't have to tell anybody in this room about the importance of entrepreneurs and small business. Our small businesses represent 99% of employers in our country. They create 2 out of every 3 jobs. They employ over half of the private workforce in America. And they produce 16 times more patents per employee than large businesses. So I got a real appreciation for the Small Business Administration. You heard from Jason that my husband and I had a small business for 8 years when we first got married. But from a policy perspective, I really got an appreciation for the issue of access to credit and the SBA. When I first got elected to the state Senate in New Hampshire in the early 90s, we were experiencing a recession because of the collapse of the real estate market. The FDIC came in and closed 7 of the state's largest banks. Thrift Savings closed an 8th one. So as you can imagine, it was a very challenging time. And what kept small businesses afloat in those days was the Small Business Administration. Without them, there would have been no access to credit. So I had a chance to see firsthand what a difference it makes. And then, of course, I came to the Senate during the financial crisis after 2008, and the SBA and the work of the Small Business Committee were critical to making sure that those SBA loans to small businesses continued. We got rid of a number of the borrower fees. We increased the guarantee. We increased the loan limits on SBA loans from $2 million to $5 million, and that continues to this day. So these actions worked, and last year the agency had a loan portfolio of $30 billion. It supported loans to approximately 69,000 businesses. So it continues to be very successful. And as you all know, access to affordable credit to capital for small and Main Street businesses remains a persistent challenge, which is one of the reasons for this Main Street project. Between 2008 and 2016, even though we've seen the economy recover, small business lending decreased 13%. At the same time, lending to large firms increased 49%. And according to a 2016 Federal Reserve survey, 60% of small businesses reported a financing shortfall. That number increases to 67% for small businesses with less than $1 million in revenue and 69% for small businesses that are up to 5 years old. So this is a continuing challenge, and as your report points out, there are some reasons for the decrease in lending, which include the consolidation of community banks, which is huge for us in New Hampshire and a lot of states with large rural populations that have a lot of small communities. Also, the decline in lending has been based on personal relationships that are no longer there. They have, in many cases, been replaced by an automated process. And then compliance burdens that have made it very challenging for small community banks to do the kind of lending that they used to do for entrepreneurs. So SBA has had a major role. We have two main lending programs in the SBA, the 7A loan program and the 504 lending program. And these have strong bipartisan support. I'm sure you'll hear this from my colleagues from the House when he comes here. They provide billions of dollars for small business loans, and they do that at no cost to the taxpayer. So this is a win-win. The Express loan, which is something that we worked on hard during the financial meltdown, provides a small loan of up to $350,000 that lenders can provide using their own forms, so it makes it much easier for banks and is particularly critical. One of the things that I've learned is that a lot of small businesses don't need millions of dollars when they start off. But they do need some funding for the capital, and that Express loan is an opportunity for them to get started. We've been working in Congress on a way to shore up SBA's loan programs to make sure that they're working as efficiently as they were intended. And as I said, the 7A program is really the flagship program, lending program. It offers affordable credit to small businesses for a range of purposes, from working capital for payroll, inventory, to financing for real estate and equipment. The maximum loan size is $5 million, and the maximum term is 25 years. The program operates, again, at zero taxpayer subsidy. I want to keep repeating this so that you'll go out and repeat it. And all of the costs are covered by the borrower and lender fees. Now, demand for 7A loans has grown 68% from 2012 to 2017. The program reached its statutory lending cap, and Congress passed an emergency authorization to keep credit flowing in 2014 and 15, and there was real concern about whether we were going to be able to get that increase in cap through Congress. So to try and address this uncertainty, we have been working on bipartisan, bicameral legislation, the chair and ranking member in both committees in the House and Senate, to raise the cap and to provide certainty to borrowers and lenders alike. And we think that hopefully this will go through without any too much difficulty anyway. I shouldn't say. I never talk about legislation going through without any difficulty. We also, in 2015, passed something called the CREED Act, which restarted the SBA's 504 refinancing program. Some of you may remember that this was a short-term program after the financial meltdown. It was just getting started, had a number of loans in the pipeline when it sunsetted. So we revised this to provide for refinancing for existing commercial mortgages, to unlock equity that's tied up in businesses and to allow them to get out from under some challenging deals. So those are some of the programs that we've been working on in SBA. But as I thought about what I wanted to say this morning. I think we've got to talk much more broadly than just the access to capital issue when we're talking about how do we support small businesses and make sure they succeed. You know, for several years after 2008 and the meltdown, every business I visited in New Hampshire said access to capital was their number one concern. That has changed. For the last couple of years, the number one concern I hear when I visit small businesses is workforce. How can we get enough workers to do the jobs that we're creating? How can we get workers who have the skills that we need, who have the education and the certifications that we need? And that's one reason the immigration debate is so critical. And as we look at the challenges we're facing with workforce, having an immigration system that makes more sense would be really helpful to many of our small businesses. In New Hampshire, we need a lot of high-tech workers, so H-1B visas are important. We also have a big tourism industry. I talked to a number of our businesses last summer who said, one particular restaurateur who said, I have to close one day a week in the middle of the tourism season because I can't get enough workers. And if we only had those H-2B visas, those folks who we had counted on in past years, we would have been able to keep our business operating. So I think it's important that we think about the challenges that we're facing with small businesses and Main Street, not just in terms of financing, but in a much broader context, because they're all related. One of the issues that we addressed when we passed the Small Business Jobs Act back in 2010 was trade. We created a program, the State Trade Expansion Program within SBA, the STEP program, to help small businesses with access to international markets. You know, 95% of markets are outside of the United States, but only 1 to 5% of small and medium-sized businesses are doing business outside of the United States. So unless we help those small businesses get into those international markets, they're going to be challenged when we have downturns in our economy. I was at a small business in Somersworth, New Hampshire on Friday. They're the business that makes the T-shirts for the Patriots. So they were feeling very good the day I was there. They had just made all of their Patriots T-shirts for winning the AFC. And I was asking them about their business because they've grown. They have 67 employees now, and they're still growing. And they pointed out that about 20% of their business is international, which I was very surprised. They were working on a big order for Norway, interestingly enough, because they do lots of jerseys for athletic teams. So we've got to help our small businesses get into those international markets. And the fight in the Congress over the Ex-Im Bank is really counterproductive, because this is, again, a program that, at no cost to taxpayers, really supports businesses to get into those international markets. And as we think about how do we keep the economy growing, the prospect of a trade war is very detrimental. The other area that I think is important to think about is infrastructure. I noticed as I was reading the overview of the draft report, talking about fintech and whether fintech is one way for small businesses to access capital. Well, fintech is great, but the use of technology is a real challenge for our small businesses in rural New Hampshire and in so much of rural America, because they don't have high-speed internet. In parts of New Hampshire, we don't have cell phone service. You know, so how can we help those small businesses get access to capital if they don't have a cell phone? Who wants to locate in a company, in a state or a community where you don't have cell service? So we've got to think about how we get those, the support that small businesses need in addition to capital as we look at how we help them grow. One of the other areas that is critical to small business that helps deal with revenue flow is access to federal contracting. That's probably, for small companies in New Hampshire, the biggest concern I hear is how do we get federal contracts? So as many of you know, there's a quota for what the federal government is supposed to do for small businesses, 5% of their work within certain departments. Department of Defense is one of the major ones, is to be with small businesses. And we're finally beginning to meet that quota. Last year we met it for a number of the departments, but we still have a lot of work to do. And one of the areas where we can help small businesses get access to federal contracting is with programs like the HUB Zone that SBA has. So HUB stands for Historically Underutilized Business Zones. And that sounds like a mouthful, and you think, well, what is that going to do to make a difference? We have a company that I visited in the western part of New Hampshire in an old mill town called Claremont. And this company is called Costa Precision Manufacturing. There are about 200 businesses in the United States that do what they do, and they want to compete for federal contracts. Well, they got a HUB Zone designation, and now they're one of 6 businesses in the country that can compete for those federal contracts. And they said, it gives us this competitive advantage that is really significant. So again, as we think about how do we help businesses get access to that revenue stream, those kinds of initiatives make a big difference. Finally, I know that one of the things the task force has identified is access to affordable capital for factors like geography, race, and gender. So some of the underserved communities and groups that have had more challenging times getting access to capital. And one of those areas that the Small Business Committee has been particularly focused on is women, because as you all know, there is a real gender gap when it comes to women-owned businesses and access to credit. We recently released a report from the minority for the Small Business Committee that analyzed the intersecting financial, cultural, and structural obstacles that hold back women entrepreneurs. 30 years ago, there were approximately 4 million women-owned businesses in the U.S. Today, there are more than 11 million. One of the fastest growing sectors of small business are women-owned businesses. These businesses employ nearly 9 million people and generate more than $1.6 trillion in annual receipts. But here's the thing. Despite that progress, women-owned businesses grow more slowly and they earn less than male-owned firms. They employ only 8% of the nation's private workforce and produce 4% of revenues. And that share has remained the same for the past 2 decades. What our report showed is that there are 3 distinct factors that affect the ability of women-owned businesses to grow. One is the lack of visible role models and mentors, the gender pay gap that deters women from starting businesses and succeeding, and then the third challenge is the one that you all have identified, and that's unequal access to capital and financing. So women receive just 16% of all conventional small business loans, only 4% of the total dollar amount. And in 2016, women received 2% of venture capital funding, and women-led companies made up only 4.9% of all venture capital deals. So we know that that's a place, just as with minorities, that we have to look at how we can increase financing for small businesses. Finally, let me just close with, we've just been through, in the last week, a very brief government shutdown. Thank goodness it was very brief. But in opening up government again, we passed the 4th continuing resolution we have since the fiscal year began, October 1st of 2017. That kind of uncertainty is very bad for business. We wouldn't run our own businesses that way, and we shouldn't be running the government that way. And one of the things that I would hope you all would do as advocates would be to encourage Congress to work on long-term funding. Now, by long-term, I mean a year. Wouldn't it be nice to get a full year of funding? because that will have a huge impact, particularly on those businesses who contract with the federal government. And as we know, it's a huge sector for small businesses who do work with the federal government. So hopefully you will help us as we try and address the budget issues that we're facing in Congress. And I look forward to hearing the recommendations from the Bipartisan Policy Center's Main Street Task Force. Hopefully there will be some of those that we can incorporate as we're looking at policy in the Small Business Committee. So thank you all very much, and I look forward to any questions. Questions? Yes. Can I ask you to identify yourself, Dana?
Yes.
And tell us
Jason.
what your connection is.
Thank you very much. Just a question on EXIM. You mentioned more or less in passing. Do people appreciate what EXIM means to the small business community, or is that are there misperceptions? How can that be addressed? And then how can you quantify what it does mean to the small business community? Thanks.
You know, this is one of those issues that has historically enjoyed strong bipartisan support. And suddenly it became a partisan issue. There were some think tanks who came out against the idea, some think tanks on the right who came out against the idea, and it suddenly became an issue in Congress. It's not clear to me how many people do understand the importance of trade for small businesses and the importance of getting access to those international markets. And that's really what EXIM does. So I don't know how to answer that, Dana. I think we can quantify how much assistance they provide. We know that. I can tell you I visited numerous businesses in New Hampshire who have worked very hard coming down to testify, trying to encourage members of Congress to support getting the EXIM Bank started. And of course, it's up and running again, but it has a cap now on how much it can lend because it doesn't have the membership that it needs in order to do some of the bigger deals. Those may be less important to many small businesses, but the overall issue, again, creates uncertainty, and uncertainty is not good. And you know, I talked about the government shutdown. Big businesses can survive a government shutdown. Back in 2013, after the shutdown, I met with some folks from subcontractors for Raytheon, because New Hampshire has a big defense base. And they were telling me that, you know, Raytheon could survive that shutdown. But for them to have that kind of uncertainty really put them at risk for being able to continue and survive. So that's why I say I hope you will talk to members of Congress about why you think this is important for small business. Thank you.
We promised your staff.
I know you did. That
You
would
would
give me
generously
a-
stay here for 45 more minutes, but they're really tough. So I want to thank you so much
Well,
for joining us.
thank you. Thanks very much.
So consistent with our bipartisan, bicameral optimism about this suite of issues, we are now joined by Congressman Blaine Luetkemeyer. I would just suggest that this is the great 30 seconds for those of you who are standing on the sides if you want to take a seat. Interrupting my flow would be precisely what you should choose to do. So let me just say quickly that Congressman Luetkemeyer is one of the few members of Congress to serve on both the Small Business and the Financial Services Committees. Causes me to believe that if we could just leave him alone for a couple hours, he could probably solve this thing all by himself. As Vice Chair of the House Small Business Committee, he's been a tremendous advocate for policies that reduce regulatory and tax burdens on small businesses. On the Financial Services Committee, Representative Luetkemeyer chairs the Subcommittee on Financial Institutions and Consumer Credit. He has also had a lot of experience as a small business owner, working as a community banker, something that Paul Grieg has great respect for, and an insurance agent before he was elected in 2008. So please join me in welcoming Congressman Luke Meyer.
Thank you. Great to be with you this morning here. And yeah, I've got kind of a unique background. I come from a very, very rural community, 300 people. I shouldn't even be here. But I grew up raising hogs and cattle, and I was a bank examiner for a couple of years after I got out of college, and I got in the banking and insurance business and as a state rep. Now I'm here. So obviously I can't hold a job, but we're good to be with you this morning, and that kind of diverse background really is helpful when you start looking at all the different issues we look at with regards to the Financial Services Committee and as Vice Chair of the Small Business Committee. So this morning I'd kind of like to, they've given me 15 minutes to put into 10 minutes what we need to be doing here, because I've got a pretty hard stop here. I've got to go chair a committee hearing shortly. But I want to talk to you a little bit about small businesses, Main Street. One of the comments that was made in Small Business Committee not too long ago was, I had a small business in there, and he said, small businesses get their money from small banks. And we have a real problem in this country from the standpoint of small banks are going away. Losing one small bank or credit union a day over the last 7 or 8 years since the crash of '08. It's accelerated. And I guess the question is why? Well, if you talk to those folks, and I can tell you from the position of being in the banking business, it's regulatory onslaught by the last several years. And it's not one particular rule or regulation, but it's a compilation of all of these. And as you start to have to do the compliance with all of these things, you very quickly learn that it takes lots of money, lots of people, and those costs on small businesses can't be spread out as much as they can on large businesses. So as a result, small businesses get their income squeezed, and at some point they just throw their hands up and say, heck with it, somebody buy me out. And as a result, those banks are no longer on Main Street, and that makes it difficult for small businesses to be able to have access to capital. There was a study that Fed did not too long ago, about a year ago this time actually, and Chair Yellen was in front of our committee, and she said, well, small businesses are doing very well. The study shows that 95% of all small businesses are able to get the loans they apply for. Well, that's true. Bottom line is, though, she didn't tell you the rest of the story in that study, and I quizzed her on it, and she acknowledged that I was right, in that only a third of the small businesses actually apply for loans. 65% in their own study said they didn't apply for loans, and so the question is why? Well, number one, if you're a small business person, you've got all your life savings in this business. Your mom and dad, your grandpa and grandma started this business, and you're going without paychecks to be able to make it survive. Are you going to go out here and stick your neck out in an environment which is not profitable? When you see rules and regulations coming down every day that's going to cost you more and more money to comply with, and you're not sure about the future of your business, especially, for instance, with Obamacare, which was a huge problem for small businesses. So what happened? They started to pull back, and they were hunkering down, trying to survive. Even though the money was there, banks were anxious to lend, the ones that were still on Main Street, they still didn't want to take advantage of that. And so you saw, with the change in administration, suddenly businesses took a deep breath and stepped back and said, whew, finally. And so they could see that the onslaught of new rules and regulations weren't coming, but yet they were still a little timid with regards to getting involved in their communities and expanding. Why? Because there still was concern about down the road the monies that they were going to invest. And I can tell you this because I talk to them every day when I go home. It's just the way it works. And I think you've seen over the last several months, they're now engaging as a result of rules and regulations being rolled back or stymied. And now with a tax cut, there's a big smile on their face. And suddenly now they have the money to invest. And they see an opportunity to grow their business and grow their communities. And you see them involved again. And I think, to me, this is, I can sit here and talk all morning on the effects of the tax cut. It's amazing. My wife is remodeling her basement. And so over the weekend, she went up and was talking to the lady who operates the local furniture store, the carpet, floor covering store. And she said, tell your husband thank you, because I'm going to get a $4,000 raise next year because of this, because my company is going to be able to keep $4,000 more because of your tax cut. I had two small business women's roundtable right around Thanksgiving. And I was talking to him, explaining to him the S Corp part of the tax bill and how it's going to, the taxes are going to be reduced. And immediately when I got done, one of the ladies just like that piped up and said, you know what, Congressman? I'm going to have more money in my pocket. And you know what I'm going to do? I'm going to go out and hire more people and expand my business. And this is a lady who had 16 employees and operated a glass shop. Over and over and over, you're going to see over the next several months, small businesses becoming engaged and the economy continue to grow. Had the opportunity to talk to a regulator. I won't tell you which one, but this individual is involved in economic policy and is aware of economic policy. And he told me, we had a long discussion over breakfast one morning, and he said, you know, Congressman, I think the economists are really missing the boat on what's going on right now with their anticipation of what's going to happen with tax cuts, because they're looking at S Corp income and sticking into individuals' income and thinking that they're going to react as an individual versus a business. They're both going to react to this, to having extra income, but the businesses are going to take that money and they're going to reinvest it in their business versus what an individual would do. And so they're not factoring in that these small businesses are going to put that money back in their business, into the communities. And when they do that, look what's going to happen. This morning we had a breakfast with some folks and we were talking to one of them. He told me the same thing. He said, you know, as soon as we passed the tax bill and they saw the amount of income that they were going to be able to keep, well, this isn't the government giving them money, this is allowing people to keep their money. This is a big, big deal. They immediately went out and hired one. This was a company that had 6 people. Immediately went out and gave the rest of his employees a raise and hired one more. This is what's going to happen across the country. The ripple effect of this is going to be significant. I think you're going to see a great economy, and you're going to see small businesses finally become engaged and be successful. And I think you wonder why they had another indication of the concern that they had and the lack of economic growth that we had. Stop and think about this. Over the last, between 2010 and 2016, I believe it was, we lost more small businesses than we actually became incorporated. And you stop and look at the numbers on it, 2/3 of all new jobs are created by small businesses, and 50% of all jobs are in small businesses. So if your small businesses are your job creators and you're losing them, what's going to happen to your economy? Ms. Mills can tell you, as a former SBA administration, can tell you that's not going to work. That doesn't compute. If you don't have job creators, you don't have jobs. And so that's what's happened during the last 6 or 8 years here. Now the job creators are becoming engaged. I think you'll see, as we continue to go here, a great opportunity for small business. I think you'll see a great opportunity to get our economies, local economies growing. And I'm excited. If you can't tell, I'm excited about the future of our country economically here. I think, you know, one of the, I guess, things that a lot of people didn't realize is that as we were going through this tax cut discussion, our leadership team was getting calls, not just from around the country, but from around the world, of people saying, hey, if you pass this tax cut, we will come. Not just businesses coming back, but new companies coming to our country. And so when we have this sort of economic activity that's wanting to come here to invest in our country, we're going to have some good times ahead of us. So this morning, I think my message to you is I think we've turned the corner. I think good times are ahead. We need to make sure that we maintain access to capital, maintain minimum regulations on our small businesses, and give them opportunity to succeed. And if they do, they will be the kinds of businesses that will drive our economy and be successful and provide the jobs that our people need. Be glad to stop right here and take some questions. Otherwise, thank you for the opportunity to be with you this morning. Yes, sir.
My name is Chip Filson. You opened your comment by saying we're losing one credit union or bank a day. In the credit union system, there's an analysis been started that talks about credit deserts, similar to food deserts in large cities where smaller towns have no locally owned financial institutions at all. One of the difficulties is getting new charters. There's about one bank de novo charter per year since 2008. In the credit union system, there's basically been no new chartering at all, and the regulator has required capital, which is not a statutory requirement, but is more and more bank-like. So the problem isn't just we're losing them. There's no new chartering being done, and typically new charters are smaller institutions in smaller communities.
No, you're exactly. Your numbers are right on. But if you're a new business person, even if you're not a bank or a credit union, but if you're a new business, and would you want to go start a business that you knew that it was very marginal if you could make any money in? Would you want to put millions of dollars that's going to take to start a new bank or a new credit union, knowing that you may or may not make any money at it? You know, investors are in these enterprises are no different than putting money into a local hardware store you want to start on a corner over here. They got to make sure you get a return on your investment. And so if they can see that regulatorily, the costs continue to rise so that it makes it very difficult to actually cash flow a new business, knowing that probably 3 years is what it's going to take to be able to eat all of your losses. So you have to have that much capital to eat the loss, plus enough capital to flow the whole business. It makes it very difficult because suddenly the capital requirements get significantly higher. And as these capital requirements get higher, more and more people get more leery because it's going to take longer to get a return on your investment. And so it's just not a good environment to be able to start that. Now, that being said, over the last several months, this last year, there have been a lot of new banks and credit unions that have applied for charters. They're in the process of getting them done. And one of the things I've talked to the regulators about, both the FDIC, Fed, and Comptroller, is getting these charters through more quickly. They've got to get this done. They can't drag this out because people have money tied up in these things for anywhere from a year to 2 years to try and get them chartered. It's got to be done more quickly. So you're exactly right. But the problem has been the weakness of our economy and the rules and regulations and the cost to comply with those, that as well as the tax rates, that made it very unattractive for people to get into business. But good point. I got the high sign. I've got to get going here. But thank you so much for the opportunity to be with you this morning, and I look forward to continue to work with you. Take care.
Really appreciate this conversation. All right, well, I'm going to ask our panelists to find their chairs, and while that is happening, we are going to spend a lot of time, we already have today, talking about small businesses. We thought it would be a unique pleasure to actually talk to a small business person, and someone who's really become a great ally of the BPC as we've been thinking about this project is Eric Dinger. Eric is the co-founder and CEO of Powderhook. You're going to learn a little bit about that, but Eric's been an entrepreneur his entire adult life, and apparently even ran some interesting businesses as a elementary school student. He founded a company, Powderhook, which provides information and connection among hunting and fishing communities. He has also been part of the national discussion, having testified before the Senate, and we are delighted to ask him to join us for a few minutes today.
Well, thank you for having me, BPC, and it's an honor to be part of this group today. My job is maybe to share a little bit of the boots on the ground story today. I'll do that by sharing a little bit about where I'm from. Lincoln, Nebraska, originally from South Dakota. I don't suppose there's any South Dakotans in the room, is there? No? All right. So when you talk about Main Street, what you're really talking about is my home, the place I grew up, the place my family's from. And so each time I've heard you guys reference what's happening on Main Street and whether there's banks on Main Street, I'm thinking back to all of these places that are literally where I'm from, where my family lives. And I can tell you it's not just the banks that are gone from Main Street. The place I grew up, everything's gone from Main Street. The school's gone from Main Street. And so I want to share a little bit about me first. As was mentioned, an entrepreneur all my life. I think I started my first business when I was 12. I lost every single dollar I had made when I was 12, when I dropped my wallet in the Alco parking lot and couldn't find it. Traumatizing. Grew up, started another business in college. My financial woes continued when my first year in business ever, I rounded my taxes, both revenue and expenses, to the nearest $100. So you can see that, you know, I've come a ways here now that I've got a venture-backed tech startup based in Lincoln, Nebraska. I want to tell you a quick story about funding that business. So funding your business when you live in a place like Lincoln, which is outside of some of the major funding hubs in this country, is a very different experience for a couple of reasons I'll share with you. But my experience in the first round of funding that we put together for my business was we talked to 87 venture capital firms throughout the country. No big deal, right? It takes a lot of conversations to get something done, right? No problem. The problem is not one of those people I could go have a beer with. I didn't ever golf with a single one of those people. Not one of those people went to church with me. So there was no way of forming a real substantive relationship with those people because they didn't live where I live. So to me, what that amounts to, and I think the research will pan out, you guys have a lot better research from a lot smarter people than I do, but what that looks like in small businesses in rural areas and in smaller towns is I think you're going to see lower valuations across the board for enterprises. I think you're going to see less money raised per round of funding. And I think you're going to see, in general, that it takes the entrepreneurs in places outside of the main hubs for funding significantly longer to put the money together that they need in order to grow their business. And as we all know in business, those of you in the room in business, time is money, and especially in startup. So most importantly, what I wanted to leave you with today is why that matters and why it matters to me personally to be here. Besides the honor of being part of a group like this, I want to tell you a story about my grandpa. So Hecla, South Dakota, a place people here have probably never heard of, 400 people. My grandpa had a stroke while he was driving the combine and went to the hospital. He wasn't a big farmer, maybe farmed 800 acres or so. Driving the combine, has a stroke, ends up in the hospital for months. So our family gets together at the hospital and we decide, okay, how are we going to go finish Grandpa's work? Because we've got to finish the corn and we got to do the beans, and there's a lot of work that goes into creating the food we all eat, right? Well, by the time we had come up with our plan and arrived at the farm to figure it out, it was done. His neighbors had done it. And I can tell you that that's what small town values are all about. Many of you who represent rural areas understand and spend time in rural areas understand that those values aren't necessarily currency everywhere else in the world, but in a small town you can count on your neighbor. And as we pick winners in this country, do we necessarily want to see values like that go away? Or can we find ways to incentivize entrepreneurship and keep those small towns viable so that the go pick your neighbor's corn values don't leach out of this system altogether? Just because it's venture-backed, just because it's tech, just because it's growth-oriented, doesn't mean that the people behind those companies aren't going to pick our values in the next generation. And I think people from small towns belong in that conversation. Thank you.
Great. That was awesome. That was awesome. So we're now going to have a chance to talk to the panelists who are the co-chairs of our task force. I'm going to do some quick introductions, and then we will have a conversation, have a chance for some questions. Immediately to my left is Paul Grieg, who is the recently former chair and CEO of First Merit Corporation, First Merit Bank, bringing a similar amount of kind of on-the-ground, real-world experience to this discussion. Paul has served in a number of American Bankers Association committees, understands the nexus between the real world and the policy world. He is still in this industry, currently the lead independent director of Opus Bank. And when it comes to our conversations, understanding what the actual implications of these different regulatory and government structures are on community bank lending, Paul is not shy, which is exactly why we are delighted to have him with us. Next to Paul is Karen Mills. I think you know that Karen was administrator of the U.S. Small Business Administration from 2009 to 2013. She is currently a senior fellow at the Harvard Business School and a leading authority on U.S. competitiveness, entrepreneurship, and innovation. And we are dining out on a couple of really important papers that Karen and her staff wrote in 2014 and 2016 on the state of small business lending. Next to Mr. Mills, Senator Olympia Snowe. Senator Snowe has a number of critically important distinctions. She was named one of the most powerful women in the world by Forbes magazine, which I think is cool. But even more important, she is a member of the Bipartisan Policy Center Board of Directors and works out of these offices, which is just an incredible benefit for us on many issues. Senator Snowe served in the Senate from 1994 to 2013. Spent a couple years in the House before that. She has a great deal of expertise, having chaired the Senate Committee on Small Business and Entrepreneurship. Last, and not least, Mark Walsh, who is the Managing Director of Ruxin Ventures. Also proud to say that Mark is a member of our Board of Directors. He's had a variety of leadership roles at AOL. You all remember that dial tone in your heads. HBO. Mark is a serial, sometimes I call him a recidivist entrepreneur, having capitalized and launched and just significant number of companies from Blackboard, Nutrisystems, VerticalNet, and many others. From 2015 to 2017, Mark also did a stint in public service as the head of the Office of Investment and Innovation at the U.S. Small Business Administration. So, as you can see, consistent with the aspirations of the Bipartisan Policy Center, we have an incredibly broad and diverse and expert group who, in the next several months, is going to, we expect, come up with some very specific ideas that we hope advance the national policy discussion. And to give you a flavor of that, I have some questions. And I think, Olympia, I'd like to start out with you as the kind of home team here. You have led a number of different projects at the BPC over the last several years, and I wonder if you could just say a little bit about what inspired you to help us develop this project and your efforts to help guide it.
Oh, thank you, Jason, and it's great to be here, and especially with my co-chairs as well. I'm just very pleased that as an organization that BPC has intentionally focused on the issues and the policies that can impact Main Street America. I think it's critical, and I think we heard that in the speeches here this morning, the imperative of focusing on those issues that can make a material difference in creating vibrant and resilient communities, all across our country. And that's certainly been recognized here at the BPC in so many ways in a number of the projects that are already underway. That touch on small businesses, whether it's healthcare financing, higher education, the Appalachia project to create more jobs in that region, early childhood initiative. So it makes perfect sense for us now to focus on the state of small businesses in America today. We've all heard the statistics, and I thought that Senator Shaheen very eloquently laid out the facts about the status of small business and its contribution to the private sector employment, and also being responsible for 2/3 of all the net new jobs created in America. The point is we have to make small businesses an absolute priority, a national priority. If you think about it, if the small business employs 60 million Americans plus, well, that gets your attention as a major employer. And that's how we should look at small businesses and its invaluable role that it plays in our economy. I saw firsthand, from my own tenure in the United States Senate as chair and ranking member of the Small Business Committee. I represented Maine, which is a rural, predominantly small business state. In fact, Karen has a home there as well. And the small businesses are really the economic engine that drives economic growth, as well as upward economic mobility for millions of Americans, as I certainly saw firsthand in my own state. And I also want to say that I was very fortunate in my tenure on the Small Business Committee to overlap when Karen assumed the leadership of the Small Business Administration, and Senator Shaheen was absolutely right. We were very fortunate to have Karen's leadership at the helm at a very pivotal time. I always used to say, and I still do, is that Karen's one of the few people in Washington that really understood how to create a job. And what mattered profoundly in types of programs that Congress and the administration were willing to support to make a difference. I think the point is here is that the state of small business is important to our future, and ever more so with the evolution that's taken place, across America. It's going to be more and more small businesses, and that's why we have to generate, the idea that we can create small businesses rather than seeing, the reduction and decline in small business formation. And yet, small businesses are struggling to, secure loans on a reasonable terms. That's shortchanging their futures and certainly America. PayNet did an estimate on the credit gap on small business loans and said that it results in a loss of $108 billion to the GDP and more than 450,000 jobs. So you think about that exponentially, as we go forward as a nation. And we know the financing shortfalls that small businesses face as well, and disproportionately. And certainly that was true in the aftermath of the financial crisis, where they were hit hardest. So you had fewer business startups, reduced credit availability, and lending has been slow to recover even to this day. So as we have gone around to talk to various stakeholders, the challenges persist. Higher underwriting and loan servicing costs that, for traditional lenders who can't get a reasonable return, as we heard from Representative Lukemeyer this morning, it's very difficult to make those small business loans. The application process is cumbersome and challenging for borrowers. Higher underwriting costs and tighter lending requirements become ever greater and have had a substantial impact on small businesses. And the emergence of fintech companies, obviously that presents opportunities as well as challenges. And so hence the reason for launching this task force. And it builds on some of the research that BPC has already done on new economy and the post-crisis financial regulatory environment. But also it will call us in to really examine the various issues that are affecting small businesses today. So we'll be talking to small business owners, financial firms, banks, regulators, and other policy experts. And we hope to release our recommendations sometime this summer, and specifically focused, on geography, gender, and race, and making no distinction on, the size of the small businesses or the types of firms. In fact, we hope to focus on venture capital firms as well as all other, high growth and Main Street firms. We'll evaluate the role as well of traditional lenders and SBA, as well as the fintech firms, and also look, at the impact of rules and regulations at the federal level and even some at the state level that clearly can make a profound difference. The bottom line is attempting to reverse this decline in small business formation. And finally, the hope for bipartisanship. This is the one issue that members of Congress can coalesce around, and that's why I was delighted to hear Senator Shaheen and Representative Lukemeyer. Senator Shaheen, of course, have served, as she mentioned, we have served the triumvirate along with Mary Landrieu, who was the chair of the committee in my final years in the Senate. And the point is, having champions for small businesses is really important. Every House member, every senator, red states and districts and blue states and districts, even purple states and districts, understand the value of small businesses as they contributed to our economic success. So regardless of political stripes, frankly, everybody has a stake in the outcome. And so we have, certainly the possibilities of finding a solution, and it's more hopeful because it does engender bipartisanship. And so I think that this is the one issue where we hope that we can find, a coalition of support on a bipartisan basis for a solution. But frankly, we have to make this a national priority and elevate it, not just deal with it on an ad hoc fashion, but to really centralize the focus and make this a primary objective on the congressional and the presidential agenda. And so we will work on Capitol Hill with our recommendations and championing them, and hopefully to inform the decision-making process as we go forward. So that sort of gives you, I think, the basis for which that we launched this task force.
Thank you, Senator, for kind of anchoring the essence of today's purpose in the next several months. I want to follow up a little bit on what Eric was talking about, really this question of kind of geographic equity, and maybe ask Mark and Paul to reflect a little bit on the extent to which a half dozen counties are really, the engines of the venture world. Is that true? And what do you think could be done about it? Mark, you want to kick it off?
Great. First, I just want to, for Eric's story, if your grandfather's neighbors had been venture capitalists, they would have stolen the corn and carved up the farm and resold it. Hence the term vulture capitalists. But the math is pretty stark. About 66% of all venture capital dollars come from and go to 25 zip codes. So a significant portion of certainly what Karen Mills at the SBA and my short and eventful time there was aimed at is trying to deploy those dollars into different zip codes, into different types of pockets, both gender and demographic, and different types of industries and businesses, so that it wasn't so concentrated. But concentration isn't necessarily bad. Silicon Valley, New York, Boston, that's the nature of the beast. Money tends to flow to where ideas are and the reverse. But the idea of deploying venture capital through smaller funds into the types of counties and cities and businesses and CEOs and founders is something that I think everyone, to the Senator's point about bipartisanship, everyone can agree it makes more sense to have high-risk capital in places where talent is. A quick line we heard last night at dinner, which is that talent is distributed evenly, but opportunity is not. And what you're seeing, my final point is, and I'll turn it over to my colleague Paul, in the venture capital world, you're seeing sort of a barbell marketplace exist. What used to be common is to see venture capital firms with $100 or $200 or $300 million in equity capital raised and looking for companies to invest in. Now you're seeing a few very large venture capital firms, the same kind of consolidation you see in the banking industry, and a lot more smaller, more nimble venture capital firms with 15, 20, 30, or $40 million raised. And I think that's good, because in my experience, raising venture capital, working for venture capital-backed firms, being an angel investor alongside smaller venture capitalists, that the smaller, more nimble firms can make those smaller initial investments of $500,000, $1 million, $1.5 million, what used to be called sort of seed capital, to get startups. And the element of startups, as much as small business as a sector, is also important. A lot of the job growth that you see in the small business sector, when you actually parse it out, comes from startups. Startups generate a lot of the new job creation in the U.S. So I'm enthused, and I'm very enthused actually about the future role of the venture community in this, in the perspective of our Main Street Task Force, because I think debt is obviously key for all the things we're talking about, but venture and equity investing, I think, will continue to play a great role in both what we analyze and the role of the economic value of our nation.
Paul, talk about the lending side a little bit, and maybe a few words about your former bank.
Sure. Well, let's start with the venture. I agree with you, Mark, in that there is not a lot of venture capital distributed in the Midwest. The bank that I ran until August of 2016 was located in Ohio, Pennsylvania, Michigan, Illinois, and Wisconsin. And as we looked at balance sheets of borrowers, it was very seldom that you'd see a venture capital investment in a borrower. There is some of that activity beginning to emerge. I can think of a half a dozen firms across that footprint that I'm personally aware of, but certainly there is a need for a greater level of venture investment throughout the country, and particularly in the Midwest. A lot of companies in the Midwest are kind of boring. You know, they're the old manufacturers, distributors, wholesalers. They're not sexy, they're not high tech, they're not prone to get huge market caps without any earnings yet, as you'd see on the coasts, and don't give the investor an opportunity for an enormous return in a very short period of time. So I think that also is one reason why there's been less attraction of venture capital into the Midwest. As far as lending is concerned, it was mentioned this morning that banks have a lot of money to lend, and that is absolutely true. Banks are flush with deposits today, as high of a deposit concentration as ever. One of the ratios that banks look at is loans to deposits. Loans to deposits pre-recession, pre-Great Recession, were sitting in the mid-90s. Today, many banks have a loan-to-deposit ratio of only 80%. So there's a lot of liquidity and a lot of lending activity that can occur. It really comes down to the credit qualifications of the borrower. Banks want to lend money. We want to earn more money by lending. yet the qualifications of the borrower are less than they were in the past. And I really attribute that to pre-recession. There was a thought that trees will grow through the sky as it relates to home value. Many entrepreneurs will start a business based on the appreciation of their home value. They'll come into a bank, borrow money on a home equity line of credit, but that untapped equity quickly went away during the recessionary period, and the borrower, the potential creator of a new small business, quickly learned that trees don't grow through the sky. Home values plummeted, foreclosures accelerated, neighbors were laid off, unemployed, and the homeowner who had a continuing increase in 401k balances and their retirement investments saw this increase in their home value on an ongoing basis, all of a sudden saw their financial world turn upside down and lost confidence. And one of the factors I would attribute to the slowness of growth in small business is that lack of confidence. What used to be a storehouse of value, the home, no longer was. And why put your home at risk to start a business when you saw the immediate 180 turn in value? So, you know, the bank I ran was a larger regional bank, yet we had the roots in rural America. We were created in Akron, Ohio back in 1845. We had lent to small businesses for years. We had many branch locations in small towns throughout Ohio. We made an acquisition in Michigan. Actually, the bank was headquartered in Flint, Michigan. Think the huge water problem that we've all been reading about in Flint. Tremendous amount of small business lending in Flint. So it's something that we had a huge appetite for, but you have to have someone raising their hand saying, I've got this great idea, and I have a little bit of capital to create a cushion for my business, a safety net, and will you lend will you lend above that capital that I'm putting in, that safety net, to help me get the business going? There were many fewer people that stepped forward with that request and desire coming out of the Great Recession.
Thank you, Paul. So, Karen, there's so many ways I could ask you to engage the conversation, but I think Congressman Luetkemeyer said something and called you out on it a little bit, which is that there's just been this kind of decline in small business that at least the data suggests has been going on for the last several decades. Some suggestion that it accelerated after the financial crisis. Do you think that we have structural issues that are diminishing small businesses? And if so, what could we do about it?
Well, first of all, I want to say thank you very much for including me, and to particularly thank Olympia and the whole panel for and the co-chairs for the efforts on this. This is the first time I've worked with the center, and it's truly magical, terrific, brilliant staff as well. And I think it's really exciting because we're at a critical moment of opportunity. Venture capitalists, which I am actually for 25 years, love this moment of opportunity. So I think we should grasp it. When I came to Washington, it was not clear that small business was very important. Small business was a bipartisan issue, and I thank Olympia. It was like getting the band back together a little bit this morning. But we knew we had a bipartisan issue. But I had to fight in the West Wing, even, to make sure people would be able to, continuously understand how important small business was to the economy. I actually had to fight about the fact that 2 out of every 3 net new jobs come from small business. Finally, I said, okay, let's have all the economists get together, and whatever number it turns out to be, that's the number we'll say, 64%. So now when people say small businesses are the backbone of the economy, we all, have a sense that that means they're important. But how important are small businesses to the economy? Well, we found out how important when the credit markets froze in the recession and small businesses started dropping like flies. So the first quarter that I was in office, we lost 1.8 million small business jobs. The problem was we didn't know it. And we didn't know it in part because we did not have the data that said that access to credit for small business had stopped. So one of the first things I think is important is to track how access to credit to small business is going, both in the venture capital world and in the small business world, and to track things like what's happening to relationship banking, what's happening to local environments. Is there a credit desert out there? Is that having an impact on business startups? We do not have enough of the available data on that, and that's one of the things that I think we have to find a way to get. We put it in Dodd-Frank in 1071. We've got to figure out a way to implement that without creating a whole lot more burden that just causes banks to turn away from small business lending. So when you look at this environment, why do I think this is such an incredible opportunity? Well, now we've got a time when things are going well, but there's still regulatory overhang over access to capital for small business. And another thing has happened. Fintechs have come in, and they've kind of changed the game. So we've got technology challenging the current environment, disrupting things, and we've got a regulatory system that needs fixing. Hopefully, the bipartisan efforts in Congress can agree, and I really would like to present this as a moment of challenge to Congress. Okay, get together and pass something. America, the American people and the American small business people know this is a problem. Let's have something that everybody can agree on and go out and fix it. And this is what this committee, I hope, might get together. If we understand how we approach reducing the regulatory overhang, cleaning up what I call the spaghetti soup of overlapping agencies where the poor small community bank doesn't even know how to classify a small business loan because one agency will say it's good and the next agency will come in and do an audit and say it's not so good. What are they to do? So in this effort, I hope we can do a number of things, that we can get a more full understanding of what is happening in the world of small business startups and in the small business access to credit. Do we have gaps? Do we have market failures? And what do we do to encourage lenders, whether they be old-time community banks and new-time fintechs? And my answer is probably both, to serve the small business community and make sure that that new startup has access to credit, whether it's venture capital credit or just a loan to start the restaurant. And to make sure that that existing small business has the access to capital that they need to take the next step, whether they're a woman-owned business, a minority-owned business, a government contractor. And I believe that we've got the resources in this country. We've got enormous assets with our banking system. We just need to fix this regulatory overhang and give small businesses the access they need to grow and create jobs.
Could I add one comment to that? Very interesting comments. The facts are kind of interesting, and very few people have an appreciation for what I'm about to say. Of the slightly less than 6,000 banks in the country, 3,000 of them have less than 30 employees. They themselves are a small business. The median bank in the country has 37 employees. And if you think about Dodd-Frank, with which every bank has to comply, and the regulatory system is demanding compliance with Dodd-Frank, there's over 5,000 pages of regulation that is in Dodd-Frank. Can you imagine a business with 30 employees being handed a mountain of paper, 5,000 pages, that they now have to comply with, and think about the impact that that then has on their true mission, which is supporting consumers and businesses in the area that they are headquartered in the area that their branches are in. So the need for tailored regulation, having regulation apply to the risk, the size, the complexity of the organization that's being regulated is really important. Peanut butter cannot be spread across a piece of bread evenly, but rather has to be tailored based upon the risk, size, and complexity of the bank. I believe that the regulators are starting to move in that direction, and it feels like that message is being absorbed and is being applied in the regulatory environment, but it certainly needs to be quickly applied such that the flow of money to these small businesses in these small towns throughout the country that these 3,000 banks serve can really do the job for their constituents and for the overall U.S. economy.
So Paul, I want to kind of build on that and focus, and we've all said the word opportunity a few times, which at least in my mind is suggesting that the very difficult post-crisis politics seem like there may be an inflection point. I think at the Bipartisan Policy Center, as a general principle, we would suggest that very significant legislation passed in crisis in a partisan way is rarely perfect. And the politics around Dodd-Frank have been so rough that there really hasn't until recently been this kind of opportunity to think about how it could be improved upon. The premise of the project, which I guess is the question, is that the small business lens is the right way to start to unpack that a little bit. And so I wonder if you all feel like is there a real opportunity now to go at some of these tough questions?
I think it is, and it is incumbent, as Karen said, on Congress making small business a national priority, but also, viewing every legislative initiative through the small business lens if it pertains to small business. I know what I had to do on the Dodd-Frank legislation that ultimately became law, which was several amendments that were targeted for small businesses, and it was a major battle. One of which was to create a small business review panel within the CFPB, so that they would have to examine, the regulations and the impact on small businesses. That was a major fight and a major battle all the way through the Senate. I can tell you, all the way through the House and Senate conference, but fortunately they needed my vote. So, so it was very important to leverage the value of identifying issues that were important to small business, and that's what doesn't happen. The other part of it was when I was, another amendment that became law was to look at industries that have seasonal cash flows, the seasonal businesses, and that's certainly unique to my state, but it's also true in so many other states. The lobster and the fishing industry, or the tourism industry, innkeepers, restaurants. And so they were reliant on home equity loans, where they'd make smaller payments in the winter off-season and bigger payments in the summer when it's the big season. But again, the tighter requirements on home equity loans as an avenue for using that as a means to financing small businesses was going to be handicapped by the approach taken in Dodd-Frank. And I was able to get that amendment in. So I think it is important that we have to be conscious. Members of Congress have to be conscious. Those in the agencies have to be conscious of how you view these legislative initiatives and how they disproportionately impact small businesses or have the unintended consequences that ultimately result in that case.
Let me add something, if I could. I think we are at an inflection point. I think it's an important inflection point. There was a recent Gallup/Wells Fargo survey of small businesses that came out, and the level of optimism is the highest in the last 11 years. And what was cited was strong support of the tax relief, strong support of and optimism regarding the continued growth of GDP throughout the economy, the continuation of this long positive economic cycle is noted and creates optimism. And so what are the small businesses doing with it? They're planning on hiring more people. This was in the survey. They're planning on investing in capital, be it machinery, be it equipment, be it plant. And they're planning and hoping that 2018 will be generating a lot more cash flow in their businesses. So inflection point, sure, you get a high point of confidence and you get a high point of optimism, and then you can get some additional change and relief. It really has a tremendous opportunity to accelerate the growth throughout the economy.
Administrator Mills.
Well, if you look at the numbers about small business, 44 million of them work on Main Street. So of the 60 million jobs, you've got 44 million in these communities. And there is some disagreement about how to stimulate that group or whether they drive the economy. In good times, they tend to have more cash flow, they tend to invest, but what do we do? How do we pay attention to them? And there's a much smaller number who create these high-growth venture businesses, but they end up to be the next Google and Facebook, so they're also critical. So I think we have to think about the land of small business in two ways. I think we have to think about driving innovation, creating more venture capital, spreading that out to all the areas where there are fabulous entrepreneurs, and creating incentives for programs like the SBIC funds and other. I think there's a review of the CRA so that more of that money that banks put into their community can go into equity-like activity. There's the Rise of the Rest that your Steve Case has brought to try to bring more of this growth. But what about the Main Street shops? And one of the things I want to put in your mind is if you look at the future of work, and if you look at all of the analysis that's going on about where the jobs are going to be, it is quite possible that our Main Street communities are going to be the places that we go where we interact with people and where we have work. And how are we going to reinvent in our minds and rethink about that small business Main Street engine as the critical driver of jobs and communities? And I think we have to make this, as Olympia just said, a priority across all of our economic discussions. We have to rethink how we are going to support our Main Street communities with access to capital, with local banks, and use technology so that the customers get a great service, but also return, I think, to some things that made America great, that if you come and you start a business, you can find your way to the American dream.
And by the way, I think we ought to be referring to the head of the Small Business Administration as secretary, because that would definitely elevate the point. Karen was at the cabinet level during President Obama's administration, but that would also send a very strong message about the role of small business in our nation's economy.
The SBA is enormously important to the growth of small business. As a banker, you look at a small business, and oftentimes the application missed one critical factor, which was collateral. It didn't have sufficient collateral to support the loan. And the SBA guarantee gave a bank the comfort and the inducement to make that loan. Without the SBA, the growth of small business in our economy would be much less than we've experienced. And as a recovering banker, former banker, whatever I am today, the SBA is very important and should get a lot of support in D.C.
I'm clearly biased, but I think it is a great jewel. And when I travel around the world now, and I'm in everywhere from the UK, the Middle East countries used to come to us and say, how can we copy the SBA? Because if we hadn't had that, we would, like the UK had 4 banks, and they all suffered in the recession and stopped lending. And we were able to use our then 7,000 banks to make loans. We raised the guarantee to 90%. Thank you. And that was in the Recovery Act. And that was a big, bold move. And we got 1,000 banks back to SBA lending in 6 months. So if you don't have that mechanism set up, it's actually the perfect public-private partnership. And we should think about how to emulate that. This administration is prone to, is open to public-private partnerships. We should emulate that in our infrastructure thinking. We should use the SBIC model. These are programs that you heard Senator Shaheen say have zero cost subsidy on the budget, zero subsidy from taxpayers. So we can make our small business engine work here. We've figured it out in the mechanisms, but we have to make sure we do what Olympia just said, the senator just said, which is make it the way we think about our economy.
So I want to open it up here to questions. If you would raise your hand and introduce yourself. We have fleet-footed mic runners moving around. All right. I'm sorry. So me, actually, I almost missed a real opportunity. So over the course of the last several months, we've been talking to a number of entrepreneurs because ultimately it's that instinct that we need to better understand. And two of the most dynamic folks we have met with, we asked if you would say a few things up front. And I think maybe Shayla, if you would go first. Shayla is the founder and CEO of Remix Education. And just tell us a little bit about your firm and then hopefully ask a question to the group.
Thank you so much for having me, and I'd like to thank my mentor, Shelley, for letting me know about this event and giving me the opportunity, so thank you. So again, my name is Shayla Adams Stafford, and I'm a teacherpreneur based in Washington, D.C. And while I do have a nonprofit, Remix Education, we work with first-generation college students. My passion for the past 4 years has been creating a software that will enable teachers the opportunity to create their own adaptive tests. That's something that's not currently available, but I really do think that that would change the world of K through 12 assessment as we know it, as we move towards a more personalized learning model in most classrooms throughout the nation. And so really what I've struggled with over the past few years has not only been applying for local, state, and federal grants through the SBIR grant program, and really some of the challenges that I've faced surrounding submitting that application and receiving feedback, but also pitching to angel investors. When you look on the SBA website, there are some resources there. However, business is not my primary background. I'm a teacher by trade. And so really having some models there or templates or just discussions with folks that have been successful in receiving venture-backed venture funding would be very beneficial. And a lot of the programs, as I am trying to become a federal contractor through the SBIR program, a lot of the programs that are available for women and minority-owned businesses take place during work hours. So they may have a webinar that's from like 1 to 3, but if you're a part-time entrepreneur, it is difficult to attend those seminars or to get that information. And so my question for the panel is, how might we kind of rethink how we talk to entrepreneurs about getting into venture funding, getting into pitching to angel investors, and some of the resources that we can provide to them online?
So I'll start, and I'm biased, but one of the jobs that I had to resign from to join the federal government was I was chairman of the board of the Dingman Center for Entrepreneurship out at the University of Maryland, College Park, part of their business school. Fabulous organization. One of the things they do is to take folks like yourself who are looking for structural guidance on how to, make your pitch, raise your first round of angel or even mini venture funding, find some, create a minimally viable product, the famous MVP we all hear about, get your first paying customer, those early steps to show validity for your idea and your model and your future. There are many other versions of the Dingman Center around this area, actually a surprising number of versions of the Dingman Center in this area, most of them centered around higher educational arenas like George Mason, George Washington, Georgetown, obviously Maryland I mentioned, and others, even AAU. So I would stop there first because you can get into pitch competitions where you actually pitch your idea and you raise money. I mean, people who show up at this with checkbooks and they actually will write you a check, hopefully on the spot, but you get a lot of experience in hearing the good, the bad, and the ugly of your idea. And what I have found, and maybe you're in the middle of this now, it sounds like you certainly are, is that iteration of your idea is the way you learn about both its strengths and its weaknesses. Just making the pitch over and over and over and over, you learn where money says no and where money says yes. The final point I'll make is your interaction with the SBIR program and those other arenas. And obviously with Karen's successor, that was the area that I cared about, the SBICs and SBIRs. My personal opinion, again, this is totally after I left government service, is I would make that your secondary source of funding. I think you'll get angel capital and early risk capital from private sector folks faster than you will filling out lots of forms and trying to climb through the very, very difficult arena that government public-private partnerships often enforce upon very small startups. When it works, it's great, but it's pretty tough to do.
Let me ask Angel if you would also share a couple thoughts. Angel's the founder and CEO of the Wealth Factory. Please give us a sense of what that is and offer a question.
Yes, thank you all for having me. This has definitely been an honor. I could stay here all day. My company is the Wealth Factory, where we design financial literacy, education, technology games. Our first game is called Credit Stacker. It is essentially the only mobile credit game in the world. It's similar to Candy Crush, but instead of swapping around candy, you swap around credit types to be able to pay off your debt, achieve a high credit score, and learn from the multiple choice questions. We were named the best financial literacy product in the country by the Office of Michelle Obama, the White House, and JP Morgan Chase. I was also named the next Steve Jobs by Forbes magazine, and recently the United Nations named me one of the 4 icons of most influential people in the world for the African diaspora. With all of that said, I have struggled to raise funding. And so one of my main questions is in terms of, I know we talked a lot about Main Street, but what are some thoughts on kind of dealing with diversity and what you think you might be able to achieve, and not necessarily doing some type of affirmative action, but just looking at, I think Ms. Miller's points on tracking data is an excellent point, and just what you think you might be able to do in terms of diversity to be able to help entrepreneurs that don't necessarily come from Main Street. They're right here in the city, right here in D.C., the city that's #1 for women entrepreneurs, but they come from a diverse background, so they still don't have the access to capital that you might think, even though they're in a major city. So just some thoughts on that.
Karen?
We actually need all of America's entrepreneurs to keep and get this engine going. And one of the issues, I think, is part of this startups, the slowdown in startups, is that we're not good enough at getting access to capital to women-owned businesses and minority-owned businesses. The SBA is supposed to give a loan to somebody who the market wouldn't otherwise provide a loan to. So why would the government be involved if the market's going to take care of it? And the answer is the market has some gaps. The market has failures in really being able to get the right amount of capital to the right people. And where is that the most prevalent? You can see it in the SBA lending, women-owned businesses and minority-owned businesses. SBA over-indexes in those. So I think it has to be a determined process. There's a whole set of things, programs that have grown up in government. CDFIs, for instance, are an excellent program, and this must not, in this administration, they really need to hear this. They must not cut this. They must triple down on it. It is one of the most effective ways because, as you spoke about, not only do you need capital, you need advice and counseling and support and mentorship. There's a whole set of things going on, and Senator Shaheen talked about some of the numbers on access to capital for women-owned businesses. Fastest growing segment of entrepreneurship, but still not enough traction, not enough money. Venture capital is just abysmal in terms of the number of women partners. And the data is starting to come out. The pipelines are starting to fill up. The pipelines are filling up, investment banking and consulting and other places. It's still too narrow in venture capital. And when women are in venture capital, they tend to be able to find the great women entrepreneurs and invest in them. So I'm a big believer in sort of diversifying all of these networks. And when you do that, you make better decisions, you find better entrepreneurs, you support them better, and you have more prosperity and entrepreneurship. So it's got to happen in the pipelines, in the minds of those in those communities, and we've got to triple down on the programs we know in the federal government and the state governments that work.
Here's a fact. Publicly traded companies that have gender-diverse boards of directors do better with stock market value than companies that don't. Period. Close quote. So how can we possibly argue that gender diversity is not good for the economy when the evidence is right in front of us every single day.
Another question? If you may pass the mic right behind you.
Hi, I'm Shelley Porgas, Shayla's mentor, but also serial entrepreneur investor. And when Karen was administrator, our organizations worked together. I was the head of the global entrepreneurship program at the State Department. So doing things that Mark talked about, which is, fulfilling the promise of talent is universal, but opportunity is not. We tried to work on that. But currently, two things I want to mention. One, to build on that notion of the returns of gender diversity, there's First Round Capital recently did a study on their 123 portfolio companies and found that the companies that represented about 70% of their portfolio did 63% better if they were gender diverse in their founding teams than the companies that were all male. And I presume that would be all white male, but I don't actually know that for a fact, but I'll just put that out there. But the question I want to ask you has to do with the perspective and the context in which we're thinking about these policies. And that is, I think one of our failures to date has been that we have not helped entrepreneurs, particularly the startup early stage ones, think about the full spectrum of financing options. So we continue to focus on banking, and that's very critical. And we continue to focus on venture capital, that's critical, but only serves, as we know, even about 11% of all businesses ever. So how about the rest of the 89%? What can they hope for? And the number one thing that should be driving anyone's business is customer revenues. So one of the things Shayla and I are working on, signing up our first number of customers. One of the things the banks look for is how many customers do you have? How many orders do you have? Or do you have things in the pipeline? And we fail to focus on customer revenues, on grants. Granting programs are another big source, and I don't know what in your policy recommendations we can do about that, but I have some thoughts about that. And the whole array of crowdfunding, crowdsourcing, certainly angel, you mentioned that a couple of times, but we really haven't focused. We've been talking about venture and banking, and while we should certainly continue to do that, I think that this opportunity right now for this task force is tremendous to focus on the full spectrum of funding that's available to entrepreneurs, and that it should be built on, at some level, a product that, or service, or whatever the opportunity is, that has an actual market that's willing to pay for it. That's the thing we're not telling the entrepreneurs. It's not good enough to say, I've got an idea, I'm going to the bank. So I'm also a recovered banker, so I'll end with that. So how about the full spectrum of funding? Is there something we can do?
Well, let me add to the comment you made, because when you were talking, the thought that hit me is really educating the entrepreneur as to how to communicate with sources of capital. What is your niche? What is your balance sheet? What's your profit and loss? What's your projection? And oftentimes, when I've talked to entrepreneurs in the past at an early stage, they can't talk in bank language, so to speak. Even though that may be boring to many people in the room, being able to talk to somebody in a way that they can relate and understand what your niche is, why people buy your product, what your likely revenue stream will be, what your likely profits will be, getting folks talking in that way to a venture capitalist, to a banker, and educating them as to how to go about the process of attracting capital is real important. I know the bank I used to run actually did a fair amount of outreach education. And we got a lot of people that were excited about learning the process of, quote unquote, getting into the system. I think that's very important.
So I want to talk for just a minute about fintech. And there is a new era that is coming upon us in access to capital, and it has a lot of excitement, a lot of good points, one of which is it is quite possible that if you go online and you apply, there's just much less discrimination, because you are showing your numbers, you're showing your facts, and then quickly you can get access to capital. And there's a lot of promise in some of the things where technology can change the game. There's also a lot of risk, because we have two issues, I think, to deal with. One is that the same disclosure rules that apply to consumers do not apply to small businesses. That borrowers don't have to be told how much they're paying what the terms of the deal are in the same way that you do when you get a consumer credit card, for instance. And because most of these businesses are going to be sole proprietorships, I think this really has to be reconsidered. The original thinking is that businesses are sophisticated, they know more than consumers, but that may be true for the larger loans, perhaps not for the smaller or newer small business owners. And I think there's not a lot of problem and cost with disclosure. And the fintech industry agrees. And they have self-organized. I think we need to rethink our truth in lending acts to make sure that they also apply to small business owners. The second big risk around fintech is what are they going to do with all that data? And as platforms become lenders, so QuickBooks is now a lender, Amazon is over $1 billion lender, Google and Facebook have not yet entered the market, but imagine if all of these folks who are going to come into the payment system also become lenders, know lots about you, they know every time you used your card, they know what you bought, they know who your customers are. There's a lot of benefit that can flow to a small business owner from having more data, but there's also going to be regulatory questions about whose data is it? Who owns your data? And how transparent are the credit scores? And how do we watch for bad patterns to emerge? So I think we've got a lot ahead of us good from fintech and a lot that we need to keep a thoughtful eye on.
Can I just ask a question in the room? Who here has ever bought anything from Kickstarter or Indiegogo or one of those places? Wow, you're a boring crowd. There should be way, way more than that. In fact, it's an extraordinarily vibrant marketplace, as we know. And if you think about it, they're self-funding platforms to the point that Karen was making. They're mini banks when you think about it. Because the entrepreneur generates the product or service, and they have software services, they have software products, they have toothbrushes, they have everything on these platforms. One of the Indiegogo, the CEO of Indiegogo, we did a great deal with him when I was at the SBA on, to your point, on data and capital raise. They're asking the customer to prepay, so it's capital raising in a way that cuts out banks and traditional sources of capital, but is a direct feedback pathway to the entrepreneur. And let's just take that data point a little farther. What if Kickstarter starts to say toothbrushes don't sell? So if you go on Kickstarter with a toothbrush, a new type of toothbrush, they'll say, no, our data shows that those things don't start to sell. Data is the new oil. So the idea for lending platforms, be it traditional banks, be it alternative sources of capital, be it fintech platforms, be it eBay, be it Google, be it Amazon, these alternative sources of capital are gathering data points about entrepreneurs and currently operating businesses, small and large. That is something that, from a regulatory standpoint, I think the genie is not only out of the bottle, was never in the bottle to begin with. So we may have some real issues there about finding out whose data, not only whose data it is, but how actionable the data is on both sides of that ownership wall.
Time for a couple more questions. I think Eric?
Hey, Eric Dinger again, farmer's grandkid. Opportunity funds were in the recent tax bill. Be curious to know if any of you have learned anything about them and how they might apply to you, the Bipartisan Policy Center's point of view on small businesses.
Well, this is new days on the opportunity funds. So I think there was an article this morning in the New York Times about them, so I think it is new news. From what we understand, this is very similar to what some things that Mark was talking about. It is incentives to invest in funds that invest in these opportunity areas. So it's almost like another hub zone set of designations. I think the devil is in the details, and maybe this is something that we should be able to lend our hand in designing. Sometimes what we find is that Congress is not the best designer of programs. So we will certainly
Sure of that?
perhaps the actual small businesses and the actual venture capitalists and others who might be affected by the program might have some input that would be valuable, and perhaps this task force might be able to think about it.
But it's great incentives for investments, from the design of it and reduction in capital gains over having to hold them over a period of time. I don't know if it's 7 years or 9 years. But again, it's, those types of incentives, and speaking to Senator Shaheen's point about hub zones, the same idea is being able to attract industries into, high unemployment areas or more distressed areas. And so this is another avenue for attracting investments.
We had place-based SBICs when I was at the SBA, where we would license an SBIC, and the men and women running it agreed to invest the majority of their dollars, both the equity dollars they raised and the debt dollars that we had provided to them, in a specific place. The places tended to be big, like states. So the program, at least as the Times described it, seemed a little tighter. It's not a new idea. I mean, we mentioned hub zones. There, Bob Embry at HUD back in the Carter administration. I mean, this is not a new idea to try and flow dollars into physical locations that need it. For instance, we had a place-based SBIC in Michigan and Flint, focused in Flint. But it's sometimes hard to find companies that are operating in those places. So hopefully this program will incent companies to move to those places and start up, as opposed to venture capitalists coming to the place and saying, hey, who can I invest in? Because the latter model sometimes fails.
It's sort of similar to the new market tax credit, too, which is another initiative within Treasury that has been effective and successful in investments in manufacturing, for example.
Final question in the back. Back-ish.
Thanks. Chris McCannell with a number of clients, including Angel Capital Association. I'm also from Maine, so it's great to see our former senator and two Mainers on stage. Talking to the senator about Section 1071 and Dodd-Frank, and from the conversation this morning with Chairman Lutenmeyer and others, because 1071 attaches to CFPB, where they don't really have a role in the commercial lending space, does it make sense to look at putting those responsibilities somewhere else where you can build more bipartisan consensus, like at the Fed or OCC or somewhere where they can look at this entire marketplace and take it away from the CFPB, which has been somewhat of a hot potato, to say the least, in politics?
I can talk about that. Having been part of the team that put 1071 together in Dodd-Frank, let me be clear about something that I think has gotten lost. The benefit of 1071 is to collect data, not to create enforcement. So the reason that we want to collect this data is that we are one of the only developed countries that does not know how many loans we're originating and where, and what the cost is. Banks collect this data. We don't as the federal government. We collect data about the stock, but not the flow of these loans. So that was the original purpose, and it came from the fact that when we were trying to make policy in the recession, we didn't know how bad it was. We had a sense from traveling the country, from talking to small businesses that were getting their credit lines pulled, but we didn't know. And once again, if you want to have regulation and you want to understand its impact, you better collect the data. So that's the purpose of it. Where that data is collected so that it doesn't have an unintended consequence. We all went on the road and we traveled around the country talking to small banks. And one of the things we heard is that they were afraid they would get penalized for unintendedly, making a lot of loans and then finding out there was some bad pattern in the way they made those loans. And there was some disparate impact, and they hadn't intended to be so. So therefore, they were just not going to make any small business loans. That's an unintended consequence. So if we separate, one of the ideas is to separate out the data collection in a nonprofit institution and collect the data. You can keep it separate from enforcement, and then you will know if you have gaps. So you can collect basic origination data, then you can collect other data on minority-owned businesses, women-owned businesses, other things as you can, and then you understand what to do in policy because you know where your problem is. And you can collect a lot of data that exists already. So that's one of the clarifications that's potentially could move this along in a better place.
All right, well, I want to thank you all very much. As you know, if you've been here before, we've now captured your emails, so we will be following up with thoughts and questions, and appreciate you spending the morning with us.